Good morning, everyone. Welcome to our webinar here at Admiral Markets. Glad that you could join us today on the 12th of September 2013, Thursday. As always, we're starting at 7:45, not at 9. I think there was a mistake there in the email sent, but glad that you joined us in any case at the right time here. It's always 7:45, by the way, so just let you know. We're going to take a look at this PowerPoint, and we're going to dive into the trading in the Forex market. The risk disclaimer is explaining that trading for foreign exchange and financial markets is considered high risk and may not be suitable for all investors. Please seek the advice of an independent financial advisor for more information on that. And this webinar is for educational purposes only. So I do thank you for your attention on that. And once again, I welcome you to this live training room hosted by Admiral Markets and presented by myself. We're going to take a look at intraday trading, and on next week, Tuesday, again, swing trading if you're more into that. And today we also have an educational webinar. Thursday, always, we're going to take a look at currency pair characteristics, to be specific. That's at 5 p.m. London. Yes, the microphone should be working better indeed. I found out that, in fact, the settings needed to be changed within the software that is used. So the microphone was, in fact, actually, the headset was actually good, but it's just the, I changed the settings in the PC, but not, it has to be changed as well again with the software. So didn't know that. The strategies, we're going to take a look at breakouts, pullbacks and continuations, and bounces, and pivot points as well, because we're doing intraday trading. So we'll be looking at the Camarilla indicator. We'll be defining the trend, looking for divergence, looking for Fibonacci levels, support and resistances, establishing a trend bias, looking for a pullback within that trend, and then waiting for the opportunity when the pullback correction breaks. All right, we're going to take a look at the Forex calendar to see what the Kiwi interest rate decision has for impact on our trading and on the currency market. But before we do that, I'm going to say hi to Michael, who had a great bonus yesterday for all of us here.
Good afternoon, everybody. Thank you very much for this lovely introduction, Chris. Thank you very much. I think today it was once again a great day for learning, and I'm thrilled to see all of you here. My name is Michael Olochov, and I'm a client relationship manager at Admiral Markets, which means, in essence, my job is to create the best possible trading environment for all of you. Here are all my contact details. You can always Google my name to find me on LinkedIn. I'll be very happy to add you as a connection. Here is my email address, my phone number, and my Skype. You can always put everything down, because at the end of the webinar, just this September, there's going to be a little surprise for all the traders who decided to participate in this live session. Before we go ahead and start with today's webinar, once again, let's take a small detour. How about I tell you a story? It's going to be a great story. Do any of you know who J.P. Massar or Bill Cahan are? In case you don't, those two people, and I have a picture of one of them, they created a company called Strategic Investments. It was created in 1992. And despite its name, the company did not deal with investments per se. What it did, it recruited MIT majors and taught them how to play blackjack. Some of you have probably seen a movie called 21. It's been a very popular movie maybe 5 years ago. It's not 100% historically accurate, but the idea is correct. MIT students are taught a mathematical strategy and are able to win big in the casino, all thanks to that strategy. All of that also involves romance, betrayal, and a bulky security guard who takes you to the back room, which you will only leave when you have no money and you have a broken nose. So the strategy mentioned in the movie is rather simplistic. Here we see some high calculations. By the way, the lead was played by Kevin Spacey. It's actually quite a good movie. I would suggest it to anybody who would like to watch it. But the strategy was very simple in the movie, but in reality it was a lot more complex. The recruitment process involved choosing one great student out of hundreds, and the chosen ones were great at making decisions under pressure and were bloody good in counting and analyzing. So the idea remains correct. Using advanced math skills MIT students were able to make profits playing blackjack over a long period of time, and those profits were consistent. Blackjack is a casino game, and therefore the house has an edge. In 8-deck blackjack, the house edge is 0.85%, and that allows the casino to win a lot of times. Because casino is consistently winning just thanks to this 0.85% edge, which is a very small edge. But the MIT students, with advanced mathematical strategy, hours and hours of training, ability to act calm under stress, all of that allowed the MIT blackjack team to receive an extra 2% advantage. 2%, they turned 0.85% into 2% advantage. And countless hours of training, dedication, and the use of mathematical skills, all of that went to generate a 2% edge. The 2% edge, though, was enough to secure high and stable profits. Now, if there's a similarity between Forex and Blackjack, it is this. Both Forex and Blackjack are zero-sum games. For someone to win, someone has to lose. Needless to say, people with an edge won, and the ones that didn't have an edge, well, they lost. So right now, I wanted to tell all of you that whoever is listening to this webinar, that those webinars are long and presenters talk about complex concepts. But still, you decided to spend your time here. And you did it to learn something new and to develop yourself. Those were your motives. Those were your aims. Right now, you might think of yourself as those MIT students. You're working on your skills, and if you carry on long enough, you will be a lot better in analyzing and making tough decisions on the spot. Right now, you're working on your edge. Every hour you spend learning, listening to webinars, reading books, and trading on your demo account, all of that adds to your edge. And how big your edge will be is entirely up to you. Just remember, if hard work and dedication allowed to make a profit on a casino game, try to imagine what can be achieved in the Forex market. And if you're still looking for a signal to start trading with Admiral Markets, there you go. A signal is right there. There's a sign I'm sending you right now. We're going to have a webinar special in the month of September. It's you can receive a bonus on deposits higher than $1,000. For details, you can reach me, and everyone is going to be eligible. So just mention webinars when you contact me. Reach me on this email or this Skype. I'll be more than happy to answer all your questions and present you with a personal offer. Already a lot of people have responded to this over the past few days, and I'm looking to hear more from you. So I'll be waiting for you to get in touch with me. Thank you very much for your attention. I hope you enjoy trading with Admiral Markets in the future. This has been Mikhail Onokhov, the Client Relationship Manager. Thank you very much, and enjoy the rest of your webinar. Thank you.
Thank you so much, Mikhail. That's a great offer. I think that everyone would like to capitalize on, or at least take a look and see what it is. So I definitely recommend you contacting Mikhail to find out more details on that. It only takes a second, and you right away know more about that. So definitely worth it. We're going to take a look at the Forex calendar and see if there's anything going on in our session. We had odd employment change, which was quite negative, minus 10K. And we had the New Zealand interest rate, which remained the same. It had a positive effect on the Kiwi, sending the Kiwi dollar to the upside, Euro New Zealand down, Pound New Zealand down, Odd New Zealand down. In our session, we really don't have any high-impact news. There's ECB President Draghi speaking 4 hours 44, and USD initial job claims 5:34 from now. But in our session, just a few medium and light impact news. Let's move on to the charts. We're going to primarily, first of all, take a look at Euro and Pound, of course, but I do think that there could be maybe also an interesting trade set up on the Euro Yen and Pound Yen. Why is that so? Well, they've both made a pretty good retracement here and are hooking back to broken trend lines and support the triangle, the top of the triangle, could be one of those support levels for the euro-yen, for example, and the pound-yen is looking back to the broken big daily top. So those are things I think are areas of interest for longs, and we'll take a look at that later on. But first, I do want to focus on the euro and pound. Anyhow, that's important for our euro-yen and pound-yen as well. There we are. Let's start with the euro. We're at the 618 fib on this 1 hour chart. I'll show you the fib from a 4-hour perspective. And you can see if we fib the down move here, it seems to have made 5 waves. And I would believe that any move up is a retracement for more downside. That view I will remain until we break above this top. So that will not change. Unless we really make maybe a lot of higher lows and lower highs here. But for a long time to come, I'm not changing that view. 618 fib is a potential turning spot, and that happens in maybe, what was the statistics, 50%, let's see, about 40% of the time. The 786 is about 50% of the time. So there is a 10%, let's see, 4 out of 10, I'm doing a bit of math here at the moment. 1 out of 10 times, 4, 60. No, well, forget the math. I'm not the sharpest at math at the moment. But anyhow, there is a 40% chance that the 618 will be the turning spot, and a 50% chance that we'll reach the 786, if I remember out of my head correctly. So that's a likely turning spot as well, as you, of course, you know. 618, we're getting some bearish candles as well, plus yesterday's up move and break of this flag or triangle right to the 618 as predicted. We broke the 50 fib, but couldn't pass the 618, and we had 2, 4, 6, 8, 9, 10 hours of sideways range on the hourly, and now are moving down. So just as predicted, and you can use these fibs really for targets and resistance zones, because you can see how nice the 50 fib worked, how nice the 618, even the 236. Only the 382 didn't get respected, but the 50 fib was likely to break because of this pattern. You can see a range after an impulse, so the next fib was very likely. You see that? Now let's see how this 618 will react. It seems that we're getting a bit of an impulse if you look at the 50-minute chart here. So maybe we'll move down faster than we did here, and that would be a signal that price action signal that the 618 is more important, or will be used more, will have more impact for the bears and bulls, more bearishness than the 50. If we make another triangle pattern, like we did with the 50 fib, then there's a high chance that we'll continue with one more up move to the 786 fib. So that's why patterns are very important, because they do give an indication of which fib might be more important. Okay, good. That was my point, although it took long to formulate. So patterns are very important also in conjunction with fibs. Basically, we have an L4 at 132.63 and L5 35 pips lower. Now that's definitely something I'm interested in. The H4, H5, maybe, but that to me, I wouldn't know why I would want to wait all the way to H4. If the 618 breaks, I think that up move is already likely to happen. So for me, the break of the H3 maybe would be make more sense. H4 is quite high, and I don't see a reason why, if the currency breaks the 618, it wouldn't go to the 786 eventually. So The H4L5 is a nice confirmation maybe, but I would go long probably even a bit lower than that. That is counter trend though still in my opinion, that long, but it could work just as this long worked and this long worked as well, even though they're counter trend. Okay. Shorts are maybe a bit more interesting, but let's take a look at the other charts just to give or get a full time frame analysis. We're getting a bounce where I have green candles here on the daily chart. 4 hour 2 and 1 hour 2. So, shorts are maybe a bit risky if you look at the coloring of the candles. The only reason is really the resistance at the 618 and the fact that we did make 5 waves and have space to the bottom of the range on the daily chart. Because if you go back to the daily chart, you obviously see that we are quite close to resistance. We respected that resistance here, as we know, moved down, broke the daily support, hooking back, and there's plenty of space down to the bottom of that range. So from a technical point of view, obviously we have that space to the downside, not so much to the upside, but our coloring candles are, of course, indicating an uptrend. So there's no harmony in that between the technicals and the momentum, because that's basically what these color candles are showing. Okay. Price is also above the moving averages, so it's a bit early for shorts looking at this. That's basically what it boils down to. But one thing is in favor of shorts is that we have divergence, right, between the 1 hour tops, for example. Let's take a look at our colored band here. Here too you can see the colored band acted as support. As I told you yesterday that it could do that. And that's what happened. Bounce off the band right to the 618. So here too, preferably a close below the band would be nice as a confirmation, and that may be a hook back. That scenario would probably be maybe the safest short attempt. Well, maybe not the safest yet. The safest would probably be a breakout like that. So once again, we have multiple ways how to catch maybe a turn. It all depends how aggressive you want to be and how confident you feel that the 618 or think that the 618 might be the turning spot. That's difficult to know now. So now it's really a bit speculative and too early to say how that will pan out. But if we do close below this band, I think the odds are increasing. You can take it upon the close of the band with the stop loss above here, or let it roll out and wait for a hook back. Take it on the pullback, or then wait for the pullback and confirmation, or confirmation and break. So those are the things we could wait for. That's all on the 1 hour chart. Then it depends if you want to use it on, if you want to take a look at the 4 hour, 15-minute world for more scale-ins and scale-outs. If you look at the 4 hour chart here, we do have engulfing 4 hour candles here with a bit of a shooting star here. Day chart has a normal daily candle though. So you can see maybe some price moving up to retrace part of that 4 hour candle, and that could become a bouncing spot or continuation for downside, maybe, because of this engulfing 4 hour candle setup. If the currency maybe retraces about halfway, that could be then continuation of downside. We have some bearish 1 hour candles. So that's about it for the band. Let's take a look at something else here. ADX with that up move hit 48. showing divergence with the previous top, right in there. ADX is growing on the 50-minute chart. Let's take a look at our fib confluence. Yeah, obviously, as you can see, that level indeed reacted as resistance, as we know. Now there are more fib confluences at the 786 logically, and there's some short-term support logically at the just below, which is confirming our band. So that's just a confirmation. Let's move on to this one. We might have a Elliott wave top in here because it looks like we finished a 3-wave. We can see a 3 dot on top here. So that could be an indication that our Elliott wave is saying that this 3-wave is finished. You can see the Oscar is reaching kind of an oversold at the moment, although the SMI is way at the top still. So that's a bit of a divergence there between those indicators. The last time that happened, we had a bit of a snapback here. And then still continuation. So that's something we could think of as well now. Maybe that could happen. And of course, the continuation last time was not too deep. That could be different now. You see that? Same setup here. A low Oscar, a high SMI. So these things, they do take time to turn. If it is a resistance spot, there's plenty of time to catch it. So let's take a look. Where's the L4 is at 132.63, and I'll put a green line there all the way here. So basically, the pivot point, Camarilla pivot point indicator is saying that it wants basically price to push through the band before it's bearish. That's this purple line here. That's the Camarilla. That's the L4. So that makes sense. I would say let's wait for that. Personally, or I'm not that interested in longs, as you know, although it did work yesterday. I am more geared towards catching the turnaround. So personally, I would rather either try to catch the bearishness, or if it were to break maybe these tops, then longs could be interesting. This is the 50-minute chart. Longs in here, I think, is a bit risky in a way because we could just chop around here for long and then do one or the other. So I'd rather wait for more clear guidance. Okay, so I'd rather wait for a break above, or if we do break below the band. And I'll just treat this zone between the band and the top as a neutral area. So that's my plan, at least. For the immediate future, but you also know that if we do break to the downside, how I'm going to tackle this in the future as well, because you know that if we do break down here and then make a retracement, we can hunt for shorts in here as well. Also, one thing I should add, if we do move up, we can definitely look for shorts again, of course, at the 786, because then the 786 could be the turning spot. So there could be a long up to the 786 and then a short from the 786. So now you have the entire trade plan here for the euro dollar basically. One more thing on this 4-hour chart is that if we do move down, the 4-hour band could still act as support. That could be the bouncing spot, in fact. Maybe a bit lower around here. So we get a short in here maybe. Then we still see a bounce. And then that would be the bounce I'm talking about off the 4-hour band. And then the break through the 4-hour band would be the double confirmation or the medium-term confirmation. The break of the 1-hour band is really not as significant for us, but it's of course just a 1-hour chart. The 4-hour band is very important as well for more kind of longer-term continuation of that down move, just like here. Okay, let's take a look at the pound. Let's see. I have here an old fib. Let me take that away. Well, the pound is, that's one of the things that doesn't really match up with the euro because we actually had, yesterday I was saying I want a clear break above this level, otherwise I wouldn't really see it as a bullishness. If we just push through 15 pips and we have a wick above that green line, above 157.50, I wouldn't consider it a break. But we got a huge daily candle towering out of that. So with the pound, it seems more probable that we can push to 160. Why 160? That's a 780. No, I think 786 fib. In fact, of this down move. $160.50. Sorry, there it is. That's the 786. We stopped at the 618. So here too, it's always a question of the currency moving impulsively and then correcting from one fib to another, one fib to another, one fib to another, one fib to another, and then either breaking to one way or another. That depends on the higher time frame. Now there's one thing though, actually we didn't touch the 618 here if you look at it more precisely, but we only missed it by a bit. So the question is, was that a full touch or not? What is the difference? 30 pips. It's quite little for a daily chart. That's a bit of a gray area there. If that was a touch and that the 618 is considered taken out, or is the 618 considered taking out right now? That's a bit of a gray area. If we do continue, we obviously have space to 786. So anyhow, that's very long term. Let's move on to something more of recent. We in any case had a very strong daily candle. So we would at least need a break of yesterday's low to have some indication that we are back or we can see bearishness. Otherwise, really everything above yesterday's low should be considered at least bullish. This was that trend channel we broke, and we've been moving up ever since. I'm waiting for new price information here. It's still old one. 1 second. Anyhow, let's move to the 1-hour chart. And it was a hefty spike on the pound news. Very hefty. 100 pips. Kind of have a maybe a double or triple top here at the moment, but as I said, I wouldn't be too bearish on the pound because we had such a big daily candle. Yes, of course it can move down here and just fly down, but I would be still very cautious above that level, because any retrace could easily find support. And in fact, I wouldn't want to trade it, despite the daily candle, I wouldn't want to trade it in here to the upside yet, but I would be interested in trading it maybe if we break into higher grounds, indeed, like the Camarilla pivot point indicator is saying, between H4 and H5. That would make sense to me for longs, because then we're reaching in a zone that there's a high probability of continuation to the upside. The L4 and L5 I think is a bit risky personally, because we have that daily candle, and I think the daily candle low is right about here. We have the green circle. I think that's a bit risky. Because you can see that support cuts right about, the L5 target. I don't think is that good of a target if you look at the daily candle low right there. I wouldn't say that's optimal. I do like the long side of it, though, if we do break to the upside that far. All right, that is 158.78. Downside, I'd rather trade, really, if we break below here, hook back, and then fall. Then we broke support, and it's more clear. Now, at the moment, I would rather probably trade the bearishness on the euro and the bullishness on the pound against the dollar. So it depends, of course, what we get today, dollar weakness or strength. But if it's weakness, then rather trade it against the pound, and if we get strength, rather against the euro, I guess. It also has to do with the euro pound, because that euro pound moved down again, although really it didn't break fully yet. As you can see, if you look at the 1 hour chart, really it's more like a double bottom, if anything, than a full break, right? We're right at the bottom still. You know that I took along with the idea to take a trade back to the top of the range. I still like the idea, but the euro pound is just an awful currency, I think. So I don't think I'll be trading that anymore. And yeah, what happened was just put the stop loss maybe just a bit too tight as well, but we got double bottom, but it did take me out there. What can you do? That's part of trading. Let's go to maybe another currency, although we can take a look at the euro dollar and see on lower time frames if there's any short-term trade to take. This is the 5-minute world. 50-minute world, we already broke through the band. You can see that. We pushed through that support. 5-minute too, of course. So the 5-minute band could act as resistance. Let's see where the 1 hour, let's see, 1 hour high is right around here, 133.16. Let me just check how much Euro news we have today. We got the monthly report in 40 minutes from now. Industrial production. We do have some medium impact, nothing major though. I don't know. I think that seems a bit better to wait with the euro dollar in my opinion, but I'm just seeing if it would make sense. if anything, probably a bounce to the upside. Not much. I wouldn't expect much of a downside continuation, but you never know, because we do have bearish 1-hour candles. You can see we're getting our prices pushing through the gray band here, just like the green band. Sorry, I'm just let me show you this chart then. I'm switching many charts. I just want to see all the views we have here. 50-minute world. 50-minute world also had divergence. I don't think it's worth the risk at the moment. I'd rather wait for more confirmation. I think that it could move up and down from this side. I don't think it really makes sense to risk capital here. It's just might as well sit tight a bit and see if we get some confirmation of either an upside and downside, or if we do break, that would be better, I think. All right, something like that. One of these scenarios is going to unfold. Yeah, and there's always the possibility that it could go into the range, just like it did actually in here. That's always possible too, indeed. So it's better to wait for more confirmation. Let's see. Adrian is saying that there's FOMC meeting minutes coming up, but I didn't see that, in fact. That's probably next week then, isn't it? Because it's not this week. Yeah, next week. Okay. Yeah, indeed. So let's take a look at the euro yen and pound yen. I think that those are interesting, interesting setups. It already broke. Should have kept on this chart. I was looking for the first 5-minute break, in fact, here. But that's okay. We can, it's still early anyhow. But waiting for this bounce. That's what I'm trying to trade. It's a bounce trade off of this trend line and key level here. And trying to establish that. The idea was that if we get a first 5-minute fractal break, to take it upon the 5-minute fractal break. Didn't expect it would happen that fast though. Anyhow, there's still time to take the trade on a pullback. It's not going to move up 500 pips in one go. So this was just a very, very early confirmation, right? This was the earliest you can have. You had a down move here, which could be seen as retrace on a higher time frame. And when you get into an area that you think could be a bouncing area, what you then could do is go to a 5-minute chart and take the first higher high off that 5-minute chart. But you need a significant area, an area that you expect a big bounce, because if you don't do that and you would just randomly, of course, take every 5-minute break of the high, you'll get many whipsaws logically, because this break of the high is just meaningless, and it's in fact actually just continues to the downside. So you need to, of course, find an area that you expect to bounce, maybe an area where price is overextended to one direction. You can see the downside has already lasted quite a long time for a 50-minute world with a lot of pips, 140. That's also approximately 117. Let's see. This was 140, which is a Phipps frequency number. Anyhow, so that's the earliest way. But we can also take another 15-minute world. What we can look for is it's going to make a pullback here and respect this band probably, make a pullback, and then take the next 15-minute break. Something like this. Either take the break of the fractal or the pullback itself. The break of the fractal, the 15-minute fractal, is the red line, of course, and the pullback is the blue. So here you can see that although the 5-minute has made a higher high, the 15-minute hasn't. You can see the 50-minute is still retracing, and there's still, at some point, it has to make a higher low before it moves up more. That's a very key realization, because that will keep you and keep traders from entering in situations that you still might get a retrace, in fact, right? Or you can still plan for a retrace. Okay? Let's take a look at the 1-hour chart. One-hour chart 2, what could happen here is that if we do move up, make the 50-minute retrace, then move up again, the 1-hour world is going to find resistance when it approaches this top, and it will probably respect that, maybe make a bull flag, and then we'll continue. That's how the psychology here would work with the turnaround on this euro yen of this downside. And if we then move on to the 4-hour chart, you can see that the downside, in fact, could be a likely retracement of this upside. And if we then move to the day chart, you see that we actually are just still retracing Tuesday's daily candle. So that's just to put everything in perspective, how you can use all these time frames. And it is sometimes a bit confusing, but the weekly chart hasn't finished yet, but we are pushing through. An important realization is that we are pushing through the weekly fractals. So we are breaking through weekly resistance as we speak. So I do believe that this is a high bouncing spot area because of that as well. So let's take a look at the 5-minute world here. We're back at the 5-minute band and got a bit of a shooting this doji here at the band. So maybe we'll get the hook back right now. And that would be maybe the 50-minute retrace we're talking about. If we get that bounce, we could put a fib on this move up, right? We'll get a bounce off one of these fibs, and we'll move up to, for example, the minus 618 target. If you are using fibs with the direction of the trend, that's a bit too early to say on this one, so I wouldn't use a statistic for that. But if you're using it with the trend on the 1-hour and 4-hour charts, you have a, let's see, 90% chance of reaching the minus 618. So that's a very high statistical probability. It could stall, though, at the minus 272. and make a flag there or something like that. The 786 and the 886 fib, however, are targeting the minus 272. And the other four fibs are targeting the minus 618, although the 236 especially, and maybe even the 382, that retracement is so shallow that often enough price would continue to higher grounds. And that's with every fib. Every fib retracement could easily go to minus 1618. That depends on the edited wave. But if you don't like waves, that's okay. Just note that the minus 618 is a very likely target, and it could even extend to higher grounds. And that's very important to realize what the targets are. And if you use these targets, you'll see that the currency really respects these levels a lot, and they're worth gold. I paid top dollar for these levels. So this is something that you just get free of charge, in fact, with Admiral Markets, but maybe you don't even know the importance of these fib targets, in fact. So I just wanted to emphasize and stress that, because these are really key levels. And the currency really respects those, minus 618, minus 272 targets, and even higher ones. Alrighty. And we know that take profits are very important, to realize the optimal level, what we can expect. I might even take a break of this level here. Although I would rather plan for a retracement. But the EJ can sometimes move up pretty fast. I think I'll take a small position here and try to add another position lower. But if it does break and go, I have at least a small position on. The spread on the EJ is only a pip or so, or 1.5. So I can go to 43. Stop loss has to go all the way below the bottom though at the moment. So 132.43. I wanted to take it lower, in fact, at 132.30, but okay. Stop losses I have below the low here, and targeting at the moment a pretty high level, but I didn't really seriously think about it as yet. I'm just targeting at the moment the top, in fact. But I might change that. I'll let you know. Sorry, where's that blue line? Ah, there's the blue line. At the moment, it's 125 pip target. Let's see. It doesn't look like we're breaking at the moment. Maybe we'll respect that band. You can see prices having a bit of problems with that band at the moment on the 5-minute world. Let's take a look at the pound yen, see if something similar is going on. Pound yen is struggling with the band here on the 5-minute world, you can see. So we would need a breakout of that level to indicate that we're making it upside. Let me take the 50-minute world. We don't have a fractal here yet. If we do, that would be also set up that a potential bounce trade after this downside. Once we get higher highs and higher lows on the 50-minute world, we could also make the upside on the pound yen. Let me take a look at the dollar yen quickly. Yen, we're on the bounce. I say this one is quite up, way up still. That's the moment. It is a pretty good trend channel, but it has to start at one point in time. It has to really move up faster to make it a more of an impulsive trend. Otherwise, it's quite corrective maybe as yet, but it could turn into impulse. But it needs to get that momentum. This could be the spot. Who knows? Or maybe we move up still, down, and then make that upside. The pound yen, indeed, Adrian is right. This does look like a bear flag. But those patterns are less statistical probability than with higher time frames. And also on higher time frames, by the way, often enough a turnaround starts like that, but sometimes it then moves up very fast. That's why we're always waiting for a break, because that's more confirmation. So let's see. As always, we have to wait with the Forex market. Nothing we can do about that. Patience is gold, because we need we have a certain, or I have a certain idea what to trade here, but still waiting for the exact setup. I took a small position here, but it's very small. That's just in case it were to break faster and quicker than I imagine. But primarily, I'm still waiting for, in fact, a 50-minute hook back and break now. I missed the 5-minute one here, but I would like to get the 15 one. The 5-minute break would have been good though. It's already up, would have been up 15 pips. Let's see. We are breaking above the band on the EJ though, so that would tend to be then the next target would tend to be the long-term moving average right in here. Then we'll probably get a retracement from that level, and if we put a fib up to that moving average, I mean, it doesn't have to be exactly there. It's just an area. I mean, it could miss it by a bit, like it did here, but on average, let me say it this way. The moving averages, I do think, are less accurate as targets. I think the fib targets are more accurate. But still, it's good for confluence. From here, we can see a retrace maybe to the 50 or 618, and the band will then be acting probably as support, because then it's going to turn around when price punches through that. When price punches through that and hooks back, it could act as support. So all of these end pairs, they're quite overextended here. Let's see when we get the turnaround. Yeah, let's take a look at the Aussie. It finally broke. Oh my, it took so long. There was really a big squeeze on the shorts, and yeah, they drove it up very, very high indeed. Finally falling and breaking that channel with good momentum. Now we're back at the 4-hour band, but it looks like we got pretty good space to fall now. But boy, oh boy, did that take time. And that's sometimes what happens when basically a move on the shorter time frames gets exaggerated in a way, and it keeps building and building and building, and the expected fall doesn't happen. And that thing can push and push and push longer than some long-term traders who take big position trades can imagine. So sometimes that's a bit of a tricky side with position trading, because you're vulnerable to really like short-term pushes like that overextend a lot further than expected. So I'm sure a lot of stop losses got hit here, and what happens? The opposite, right? So yeah, pretty good break here. We see the break of the band too, together with that trend line. So any hook back here, I think, is a likelihood of continuation, at least one more time. Yeah, that's true. Though the Aussie had a pretty big employment number, as we mentioned at the beginning there. I'll show it again otherwise quickly. Right? Look at that employment change. That was pretty negative. So technically, I do thought it was at the resistance, but who knows? If that number would have been positive, maybe we would have seen a major bullish candle and we would have broken that level. I don't know. But to me, technically, it did fit. Let me say it this way. But with the Aussie, you never know. I wouldn't take the trade on the pullback, because the Aussie, at the moment, I'd rather wait for confirmation for the break to the downside. Otherwise, I would be careful, because although it did move down nicely and broke the channel, it just could be a pullback for more. So instead of trying to sell it upon the up move, I would rather wait for the break, the next break basically. So what is our euro doing now? Yeah, we did get a bit of a bounce here. The pound, this is the 50-minute chart. Pound saw a small fall, and that's of course why we saw the pound yen a bit more hesitant than the euro yen. Otherwise, we did see bounces on the euro odd finally. And the pound odd as well. We got those bounces finally as expected. Why is that? Because at some point or another, the currency is going to bounce, even though we are in a downtrend here. We need a lower high, excuse me, if we want to make a sustainable trend to the downside. So at some point, the downside, even though it looks very impulsive, has to find retracement. No one's willing to sell it anymore so low, and it's going to make a relief rally or a dead cat bounce for that lower high, at least at minimum. Those trades are good because there's a high probability that eventually we'll get that bounce. Just have to be very careful that you don't try to go long too soon, because you can get caught in that. Often enough, the 4-hour chart is one of the better ones. for a move like that. Let's take a look at the New Zealand. New Zealand is right at resistance right now. So yeah, this trade was very nice, trading it up from about here or here. No, we were waiting for this. Sorry, we were waiting for these resistances to break, right? So we said once we break that, we can nicely trade it to the upside. That's what happened. Now, I would say this is a heavy resistance indeed with these tops in here, and would be very careful. Actually, we got a 4-hour rejection candle. That could be bearish signal already. But probably would want this band to break. And then just like the 4-hour move here, let's go back. Just something like this, we were waiting for support to break. We could do that to either wait for a break, hook back and continuation for the upside, or if we do break here, take it back to the downside from here. That's of course the safest. Anything in here I mean, makes sense because we are at a resistance, and we do have a 4-hour rejection candle. Now you know that I traded the Aussie with a similar resistance level and a rejection wick that didn't work, but it could work now. It's just a bit more riskier. We don't have any confirmation as yet. I do think that this is a likely bouncing spot off the rejection though, considering the large up move, the big resistance. All right, something like that. After that, we could get a bounce up and down again, but we'll have to see how price responds to those levels to make judgment on that. The Euro New Zealand and Pound New Zealand, they're right at bottom still. So still waiting for a dead cat bounce here, or maybe if it has enough energy to break through. But as I said, a breakthrough I think would soon see still a relief rally a bit, at least for a while. So not too confident about that. Pound New Zealand is also right at the bottom of a trend channel. So let's see if we can break here, maybe some downside there, or otherwise some upside potential. We're at a talking spot. The odd New Zealand, though, interesting enough, that had a huge break, and in fact, we kind of broke that channel that I have on the chart already here, and the next one here. So that was the news event, of course, and the odd New Zealand, in fact, if you put a fib on the upside right here, you can see we stalled at the 786. The next target is the 886 if we do break the downside. It looks like we're breaking. I would wait for today's candle to close. If we break today's candle below that broken resistance, support, excuse me, then, and we don't have too big of a wick, we'll probably make that fall to the 886 fib. So you can either take it on a lower time frame, look for a hook back and continuation, or, for example, a square up of today's candle and then continuation, or a break of today's low. Although the stop loss is a bit difficult to place, would have to be here. That's more of a swing trade, right? But we are definitely breaking this this trend channel to the downside on the odd New Zealand, and the trend channel, in fact, from a weekly perspective or even daily perspective, is more of a bear flag now that we've broken. These chart panels are very important, but it's also important to wait for the breaks, because sometimes they're not a bear flag, but they are a trend up, and we break like that. So both the top and the bottom line were important, but we broke, in this case, the bottom line. Okay. So anyhow, that's the AUD New Zealand. So that's pretty interesting. Pound New Zealand, Euro New Zealand at talking spots, AUD New Zealand breaking, New Zealand dollar at a bouncing spot as well, or breaking, or bounce or break, let me say it this way. So the dollar, euro, and pound against the New Zealand are bounce or break spots. AUD New Zealand is breaking. Euro yen didn't go anywhere, just right at that spot. That doesn't surprise me. As I said, my main trade is really waiting for a hook back. But sometimes the momentum is so big that it makes a surge higher than one would think, and you know, there was maybe a bigger move than anticipated. So sometimes taking a bit of an earlier breakout can make sense. But as I said, I was really, in fact, planning it here. But what can you do? Dollar yen is fighting against the band right now. Pound yen is going nowhere. Euro yen might see a bit of a problem here. Let's see. I'll give it 7 more minutes. If we don't get any follow through, then probably we'll see a bit of retracement first before we continue up. The 1 hour chart is definitely looking good though, right? You can see wick at the bottom, good continuation 1 hour candle. Now, of course, needless to say that we did have that here as well. So it's very important, you know, also the spot where it's happening. It's happening at a bouncing spot because we're at the long-term moving average. We're at the trend line that broke. So that's why I consider that to be more important than I would have considered this price action to be you know, important. So for those of you who are wondering what the band is, it's 34 EMAs, suboptimal moving averages, 34, and there are 3 of them: the close, the high, and the low. So that's why you get this band like that. Dollar yen is pushing up. In fact, that could be a good breakout trade here. If you put a trend line on these 50-minute tops, you can see multiple touches spaced out, pretty good angle. So what I would be expecting is that if we move up here, we could still respect that trend line, retrace off of that trend line, and then the next break could be a good one. Something to keep an eye on. What are good characteristics of trend lines? Well, we would preferably have 3 hits, 3 touches, but we also want a bit of space between those touches, because otherwise you could have 3 candles hitting it. That's not a trend line. That could be a trend line on the 1-minute chart, if that would be a 50-minute chart we're looking at. Of course, obviously, if we have touches that close, that's not a trend line. So we need space right, in between those touches. We want 3 touches, but 4 or 5 is good as well. If there are too many touches, then sometimes the trend line is in a way too big. I mean, if they're really like 11 touches, it's nothing wrong with it per se. It's just that it's less tradable because it's more like a range. If it's that big, it becomes less precise. Let me just say it this way, because it's difficult to make a trend line that hits 11 points so precisely. So you're going to cut through. It becomes less neat. That's often the case. This is a very neat trend line because it nicely incorporates all the touches, but it's okay if the price were to break through a bit, right? But you don't want 5 candles outside of it either. So a bit of price through the trend line is okay, but not too much. In this case, we have no price above it, so that's fine. That's great. The angle, of course, preferably depending on what trend line you're looking at. If you're looking at the trend channel, you want a 45-degree angle of the trend channel. If you're looking at a trend line, you preferably want something between 20 probably and 40. That gives an angle of a bull flag or bear flag. Anything more than 40, it's becoming quite steep already. And there's the risk that if you do break that trend line, it's just a small retracement for more downside, for example. So the break is less reliable. Just a quick refresher on trend lines. If that's something new to you, then I'm glad because you learned something. And if you needed any extra explanation, just let me know. So that's a good trend line, I think. Darshan is talking about the Kiwi. Let's take a look. And Darshan is saying that Darshan has a feeling that the Kiwi does not want to drop. And to be honest, I have the same feeling. That's why I'm really not reacting to this 4-hour candle, although I think it's a good rejection wick off of a resistance. I would rather see it before I believe it because I'm a bit reluctant at the moment. I would rather wait for the confirmation of the break and then take the next break. Totally agree there with you. Yeah, very impulsive move up. Absolutely. Absolutely. Especially after it broke this resistance. Remember, last week we were looking at this resistance. Once it breaks, that's when we want to look for longs. And it made this consolidation pattern, and after that, wow, it surely flew up, right? Actually, we had a pending order. I had a pending order at 78.40, remember? And it went to 78.54. So that's a shame, 14 pips. It was maybe just a bit too conservative on that entry order shift. Pushed it a bit higher. Missed me about 14 pips, but otherwise it would have been a really great trade. The blue line is actually the target. I still have it on the chart. That would have been, yeah, that was an easy hit, in fact, as you can see. I'll take it off, though. Would have been a good trade, a pity. I did take the break, I think, somewhere in here. I think it was this one. Let me take a look. Yeah, that was here to take that break. Took a while, though, because it was like, let's see, 8 hours of silent move, and then it finally went. Anyhow, it was very impulsive after that, indeed. Or not impulsive. In fact, if you look at the 1-hour chart, this was quite relatively choppiness, but on a 4-hour chart, it looks very fast, indeed. So I hope you see that when you can use fibs, support and resistance, trend lines, and divergence, you can that's all you really need to make an assessment of the path of least resistance and at what part or what space or what piece of the pie is worth to trade. Right? Currencies are always bouncing from one level to another, from one support to another resistance, from one top to the bottom, from one fib to another fib. So that's why those fibs and the support and tops and bottoms are basically, of course, tops and bottoms are methods of those support and resistance. Just like trend channels and trend lines are. And divergence just warns us if a move is overextended. Together with chart patterns and a couple of moving averages, in my opinion, that's all the tools you need. Now for intraday trading, I do agree that the Camarilla pivot point is really a good window. Anyhow, that's why I'm very leery of taking longs here, because we're just right at the top. I'm not going to buy at the top because that's just a golden rule for me, and I think it should be a golden rule for every trader. There's no reason to go long on a 4-hour chart, at least. Maybe if on a 1-minute chart there's a scalp to the upside, I don't know, but if you go low enough, maybe there is enough space to the top still left. That's my point. But on the 4-hour chart, obviously there's not enough space because our risk is maybe at minimum all the way here is our stop loss, and our potential target, of course, is the top. So logically, the reward to risk doesn't match up here. As you can see by the boxes. Or another way of doing that, just to give you a friendly reminder of a trader who is maybe trading for a big institution. If he would be trading long term, let's forget the department that it's scalping. They might not look at this way. They might see a short-term possibility of a 20 pip move up, and they would take that. I'm talking about the trader that trades with a 4-hour chart. If he looks at this chart, he's never going to take that buy because he has to tell his boss, his trading manager, that he took a long right in front of this major resistance. That will not do. I think that he could pack his stuff. So, you know, that just look at it that way. Once again, I'm not talking about the scalping department at the bank, but you get my point, I hope. So that's one way of judging trades that you want to take. Can you justify it to a boss if you were to take that trade? If you had to report to someone, could you, sufficiently say this was definitely a trade that made sense? And it's also good not only to look at things that make sense, that it's a good trade, but also to look good at elements that actually stop the trade from developing. What are things that could make this trade not work out, right? That's good as well. Anyhow, I don't want to drag on too long, but I thought that was maybe useful for you. Dollar Swissy, we're still at the 50 fib. Let's see if that is the bouncing spot like I think it will. Just like the euro dollar, I'm expecting a bounce, but we'll have to see if that is indeed true. In any case, we're at the 50 fib, so let's see. Is it worth trading right now? You see, one way of doing it is the early entry. That would be a break above here with the stop loss below here. That's trading the 50 fib bounce. The other way would be to let it break, let it hook back to the band, and then take it off the band. That is the confirmation. So it depends again here how aggressive you want to trade it. Or you could put maybe a trend line. There's not a good trend line though at the moment. This only has 2 hits. But if we were to move up, hit that trend line, respect it, the next break would be that confirmation trade I'm talking about as well. So taking it at the green level is early. taking it at the pink level is more confirmed. Do you see that difference? The pink entry, of course, is less risky. So, you know, if you take that one, there's a higher probability. The green one, it could work well, especially if we're at a very big bouncing spot. Would I consider this a very big bouncing spot? It's a decent bouncing spot, that's for sure. It definitely could be one. Now, obviously, if this were lower, maybe at a major resistance, support the trend line, that would help even more. I don't see that on the Swissy as yet. If we were at the 786, maybe I would take the early setup quicker than at the 50. So I'll probably wait for the pink setup here. Get a bit more confirmation on the dollar Swissy, but I do think that it has the potential to move up. It just rather wait for it to move up and then take the next break. Because otherwise, what you do have to realize is that the momentum is still down. This was a down momentum. At the moment, price is hardly moving up. So it kind of looks even like a bear flag, in fact. So that's why I'm a bit more reserved and rather wait for a break of the purple line before trading it. What else? Well, we have the dollar CAD left. The dollar CAD is in fact breaking through that daily trend line. That is quite bearish. Doesn't mean I'm right away shorting that currency though right now, because it has extended quite far. At some point it's still going to make the bounce, but the likelihood of a continuation downside is increasing though with the break of that trend channel. Then again, we do have to realize that the trend channel is just an area, because easily you could put a line like that and the price is right at it. So, but anyhow, it is an important area that we've broken through. Needless to say, there's obviously still horizontal support around 103, which we haven't broken yet. That could definitely provide a bouncing area. Your CAD hasn't gone anywhere since yesterday. It's just right at that support level. Can't break to the upside, can't break to the downside. So it's 9:10. We're just a few minutes away from actually our end of a session. I didn't realize how time is flying. If you have any questions, let me know. In the meantime, I'm going to take a look at our euro, see how that's doing. So what happened with the euro? The last hour we had a small candle of 13 pips, so we didn't miss anything by not trading the euro. As you can see, we had a bit of a wick, but also a bit of a small bullish close. So maybe that would be the first indication we will make a small upside. As I said, not really interested in trading it in this range zone here, either below the band if we close below the band, or above the top if we close above the top, the 1 hour chart. For those of you who just maybe joined, because the invitation said 9 a.m. UK time, unfortunately we did start at the usual time of 7:45, so apologies for that. But I hope that you could join us next time. I'll show you where you can register for our next webinar in just a second. So I'm on a waiting mode for the euro dollar, as you know, for one of those two to happen. How about the pound? Once again, the Camarilla at 132.63 up to 132.27, and from 133.51 to 133.87. Although I don't like that one personally, as I said. Actually, I forgot about that. I don't like that upside in the euro. If there is upside, I would rather take it on the pound at the moment, which would be anything above 158.78, or yeah, up to 159.28. We've had pretty slow mornings, in fact, so far. I mean, this is really, even if you wanted to trade a 5-minute chart, I mean, I was looking at the 5-minute chart thinking, oh, is there a trade we can take right now? But really, I said maybe a bounce here that would have worked maybe okay. As you can see, it was a bouncing area. But what did it move? 8 pips so far? I don't know. Rather wait probably for the break. Let me take a last look, though, at our euro yen, pound yen, and dollar yen. Pound yen is breaking. Euro yen did push up. See, it's still pushing up a bit. That's why I did take an early entry. I wish I would have taken this one, right? That was the best one. We went up 20 pips already. Anyhow, doesn't matter. Just realize that nothing goes in one shot, right? Although the 50-minute world is moving up nicely, we're going to get a hook back at some point. So let's see, up 7 pips at the moment. So, well, yeah, you know my game plan. I'm looking for that momentum reversal to the upside. The target, if you want to be more careful, because indeed looks pretty slow, the market today, then the conservative target is really anywhere around 133, for example, or 133.30. Those are conservative targets there, just in case we do make an up move but get rejected here and start to make a range within these two levels, right? So that is the conservative target, because if you speculate on the break of the red line higher, like I'm doing here, to the next resistance, or even higher, and a break of the top, what the pound yen did do, by the way, the pound yen did break the top, then of course that could happen and gives a better reward to risk, but it is less likely, right, to happen in one go. It's going to make ups and downs and maybe make a range. So I will see. I'm not all too sure yet. I will look at price action and see how it responds to make that judgment. At the moment, I'll keep it there at 133.67. I definitely might move it down, though, to 133.30 to capitalize on the trade earlier. So let's see. It's still pushing. As I said, this could be a bouncing area for that 50-minute hook back, but you never know. We'll have to find out when it happens. One way of doing that is maybe putting a fib on the last 15-minute down move. Yeah, that's the 786 fib. That could be maybe just a small, that could send it maybe lower, back to the 50 and then up again to the minus 618 target. Let's see. Well, I don't see any questions. I do have one question for you, though. I'm just curious if you can answer this poll. And the question is, so there's a question for you. I'd like to get your feedback. What type of trading do you prefer? So I got a lot of answers already. That's great. Thank you so much. I guess there are just a few of you left. There's thank you for your answers in the chat, but you can actually click on a answer within the screen there. many of you have voted, so that's great. I do appreciate the participation. And I'll have more of these questions because I would like to see what the most value is there for everyone in trading. So we'll have more. I forgot yesterday yesterday and Tuesday I forgot actually because I had questions ready. I totally forgot about the poll. But that way I can eventually hope to see kind of what kind of trading is interesting for you and what you value. So I'm just out of curiosity, and maybe we can use that information as well. Alrighty, thanks so much. Well, that wraps up our trading session today as well. Let's see when the euro yen gets that hook back. It is making a bit of a downside right now. I will be waiting for a kind of like an inverse head and shoulders pattern for the upside. So that's my primary focus on the yen today. And yeah, if the euro downside or pound upside were to happen, then that would be something I'll keep an eye on as well, of course. Well, I wish you great trading. The rest of the week, I hope to see you then tonight, right? Because we'll have our session on characteristics of the currency pair. So I hope to see you then. Cheers, everyone.